We now move on to our first panel discussion on the topic Sectoral Review of GST. Are benefits equitably distributed? I would now like to invite our distinguished speakers on the panel to please come to the stage. CA Atul Kumar Gupta, Chairman, GST Committee, Federation of Indian Industry, past President ICAI, and a renowned GST expert, author and speaker who is known for his practical applied knowledge and judicious wisdom. Mr. Gupta is also a present board member of IFAC and XBRL International. CA Sushil Batra, CFO Relaxo Footwears Limited, overall in charge of the financial accounting controls and reporting, managing investors' relation, preparing long-term and short-term business strategy, driving digital transformation and planning direct and indirect tax in the organization to optimize tax liability with minimal litigation. So you can CA Mohammed Salim. CA Mohammed Salim is the General Manager Finance in Power Finance Corporation Limited, India's largest financial player after SBI. He is the Chairman of Indirect Tax Committee of the PhD Chamber of Commerce and Industry. Mr. Salim has also authored 4 successful books in GST. Mr. Sanjay Sharma, President, Sales Tax Bar Association. Mr. Sharma has around 28 years of vast practical experience in handling tax matters, both direct and indirect, of trade and industry, at all levels and particularly tax compliance matters. He has been selected as a representative member of AIFTP in the prestigious Grievance Redressal Committee formed in the state of Delhi to tackle the grievance of taxpayers and GST-related issues and to voice the inputs to GST Council. Mr. Sudipta Bhattacharjee. Sudipta specializes in direct tax advisory, including GST, customs, international trade laws, pre-tax GST laws, state excise laws, with over 15 years of experience. He has been acknowledged and recognized for his experience and expertise by Business World Legal in 2020 as India's finest lawyer. CA Sumit Mishra, Head Content Taxo.online, and our moderator for today's session. Sumit drives content development and enrichment for Taxo with his team and has over a decade's experience in indirect tax practice that gives him a good perspective about what GST professionals need and want. Over to you, sir.
Hello. Hello. Thank you, Kritika, and I welcome all my fellow panelists over here and all the attendees right present here. Am I audible? So unraveling the GST for 5 years, you know. So we have now panelists. We will discuss about the sectorial review of the GST during these span of 5 years. So we have attendees from various sectors. Somebody is from construction sector, somebody is from power sector, and somebody is from logistic. So we have attendees from different sectors. So I would be happy just to get some insights from you all so that we can address the issues, the complexities we have faced during the span of 5 years. So what I understand, the government is always clapping like it's a win-win situation, just bringing the GST to all the stakeholders, to all the consumers, to all the business entities, but still I feel there are certain complexities even after bringing GST. So considering that, I will ask you some questions like to address the attendees. So one by one we have questions like first of all I would like to ask Atul ji, whether the GST aimed at this passing on the equitable benefits, after bringing GST, whether the benefit has been equally passed on to all the sectors, it's a big question now. So I would like to have some views on this particular issue, if you can address to our attendees.
Thank you, Sumit, and even I will request all the panelists to give a small overview of their thoughts on the
Definitely,
GST.
I will go one by
one. So whenever they are speaking, I believe that will give the more connectivity with the audience, all our respected colleagues. So friends, as Sumit rightly mentioned, that we heard the two distinguished speakers, Prateek ji and Fali Saab, that the aim of bringing the GST was certainly to avoid the cascading effect, to make the industry the more competitive, whether it's in Indian market or at the global level. And I rightly mentioned the one nation, one tax, that earlier we were following the many taxes, including the central and the state level taxes. And now finally we have the one tax that is called goods and services tax. Yes, there are the three different, I will say, the central GST, state GST, and then we have the IGST, and separately the act available for them as well. As you rightly mentioned, that the aim was to make the overall ecosystem more competitive at the national and the global level. But yes, all my colleagues who are sitting here with the respective industry, may it be the electricity, may it be the gas, may it be the construction, and even the publication, because we have the Oak Bridge as our partner. So you will agree with me that though the aim was to give a overall boost, or I will say the exponential growth to all the sectors, but even Deepak ji we have with us, who is the Director General of Federation of Indian Industry, and he is getting a lot of queries every day, and he is passing to me that, okay, Atul, this sector is facing this particular. So the answer will be I will say partially yes. So the benefit is equitably distributed. The answer is partially yes only. There are, I can give you maybe the 20 different examples, maybe 2 or 3 right now. And since we have this Oak Bridge, I can tell you that in case you are importing the contents from outside on the OIDAR services, that is the online information and data access and retrieval service, you are supposed to pay the GST under the reverse charge mechanism. But at the same time, when you are selling the journals to a specific community, the same is not subject to GST. So that creates an anomaly and making that sector practically unworkable. So likewise, I can tell you, for example, you are going for renting. Now you are constructing the mall, you are constructing and you are spending a lot of crores and crores of rupees you are paying for the GST, but you are not getting the credit because you are into the business of a leasing of the property, and section 17(5) says that, okay, you are not eligible to claim the credit, though there are the judgments in favor, but still the overall, the authoritative view is that, okay, no, it's not available. I can give the many examples like the petroleum sector. Today we all are consuming the petrol and the diesel in one or the other way. But whatever the GST is there on the raw material side, on the consumption, on a input side, is getting subsumed into the cost, and each of us is paying the GST in an indirect way because it's an indirect tax, but we are not getting the benefit. So if I say that there are like somebody should not feel that I'm saying that the benefit of the GST is not there. Yes, the benefit of the GST is there, but there is a lot of study required, lot of I will say the ground level working is required, which I believe can support that your question, that whether the benefit is equally distributed. So if we want to achieve that, we need to have a sector specific studies, and the sector specific challenges we need to understand. We should have a more consultation process that, okay, which sector is facing, and I can tell you many other sectors like this. So my answer will be, Sumit, that it's partially yes, that the benefit is distributed but not equally among all the sectors as we plan. Prateek mentioned that, okay, the marriage, that you feel that, okay, everything will be very, very, very good, but it's something, exactly it's not the case.
So that's really insightful. Like Salim ji and Sushil ji, you are coming from the specific corporate sector, like you are just dealing in the finance sector, you are dealing in the manufacturing sector. So I would definitely love to know about the impacts of GST, complexities of GST you have faced across the sectors, like finance sector or manufacturing sector.
I am from footwear sector. It's a different, I think all are using that item. We are in masses. So our experience with GST or finance, I think I'm not giving the reply of your question, but just I'm just sharing my experience. So footwear, I think before GST, VAT was there and 22 states, and I think there were different rates for all the footwear, and there were different kind of definition, either it's a PVC, Rexine, open footwear, closed footwear, so many definitions were there. So we were really facing a tough time handling the VAT in 22 states, and we are almost in every state. So with GST, definitely one nation, one rate, definitely it's a big sport to the industry. But after that, when it came, so earlier it was MRP base, and GST also started with MRP base. But after 1 year, they realized, yeah, GST concept of GST is a transaction based. So then they bring a changes in 2018 also. And then I think so many changes came in last 4-5 years. So we are really confused. We are happy, we are sad, we don't know where we are. So, but things are settling definitely. And initially benefits were visible because every cascading effect was not there because you were getting the input and all this one. And because we are in the lower bracket and inverted duty structure, so lot of challenges were there getting refund. Getting refund from department, we can understand ki they think they are paying from their own pocket, and how the system worked in these years, really just we know how we are managing that part. So we went to, I think, North Block, Atulji, we went more than 10-15 times in last 4 years. Every time lot of presentation, getting so much support from people. They listen, they agree, and they show their helplessness ki yes, it's not possible, it's not workable. Say one example, say services, you can't get the refund. Your item is 5% and your input is 18%. So what to do with that? It should be part of your cost, or it's a receivable item. And so many unorganized players are managing it differently. They know how to manage. So in an organized sector, really, as a finance also, it's a balance sheet item or P&L item, really tough to decide. So all the challenges are there. We are passing through. Finally, from 1st January 22, they increased the rate from 5 to 12%. It was a big boost as far as GST is concerned. But we were never thought it will impact so much in the business also, because you increase the prices, and so many unorganized players came in the picture. Ki yes, with managing the tax, they know better than us. So all the challenges are there, but still we are very positive on that part. Ki yes, after this rate increase, now refund part is over because everything is adjusted from that. And recently on July this month, they bring the services again in the refund part also. In 2017 it was there, 18 they withdraw, 22 they are bringing it back, and they are also really settling, I think. North Block is also settling how to address the industry issues. So overall, yes, we can say it's a good journey. Long term, it will be very benefit to the industry, and everyone has to fall in line. So with that, tough experience, we are saying future is much brighter. That's what we can say. Thank you.
And, Salim ji, I will definitely ask your views as well.
Thanks, Sumit. I am working in this Power Finance Corporation, leading financial player. So I would like to dwell on this, our banking financial sector, although it has been a mixed one. Although GST, if we talk, as has been discussed by Atul ji and sir, that it is a mixed bag basically, GST, because it is of such a magnitude. It was a basically biggest change in the legislative history of India. This was not a small change. So accordingly, it was expected that some roller coaster ride will happen. But still, if we see, it is a partial success and some sort of work in progress, because we need to take some time, and all the government has also shown flexibility on their part. They have also carried out various amendments as and when required, and accordingly in due course of time, like in Income Tax Act, if we see 1961 Act, and still lot of amendments we see, lot of circulars, lot of. So GST is, if we compare with income tax, is a baby law basically, a 5 years old only. So it will take time. As far as this banking and financial sector goes, one of the major change, the initial was that under service tax, there was a concept of centralized registration and all. But under the GST law, you needed to take the state-wise registration. So that was the initial hiccup on the banking and financial sector, that multiple registrations were required and all. as far as manufacturing industry, that was a big advantage that multiple registrations, rather you take one registration, was state-wise registration was required. And further in regard to banking financial sector, the rate of GST was increased. Earlier it was 15% and it became 18%. So for PFC specifically, because we are dealing with the power sector basically, we are granting loans to the power sector only. So power generator, power distributor, power distribution companies. So in most of the cases, as we all know, power was not subsumed under the GST law. Electricity duty is still separate, entry 53 of the constitution. So as power was not subsumed within the GST, what happened that our borrowers, because as far as the financing sector goes, interest that we charge on the loan is exempt. That was exempt earlier also under the service tax regime also, under GST also, the interest on loan is exempt. But the fee incomes and all, several fees is being charged by the financial institution banks, like management fees, upfront fees, processing fees. That was earlier also subject to service tax under pre-GST regime, and under GST law it is subjected to GST. So, but due to the increase in rate from 15 to 18%, and as the power sector was not under the GST, they were not in a position to avail the input tax credit. Basically, there was a small impact on this power sector, and eventually, if we talk about power sector, everything, if the cost is increased, then everything is transformed into the cost of supply. Cost of electricity supply, and naturally for industry manufacturers, the electricity cost forms major part of the costing. So if the electricity cost goes up, hikes up, it will affect ultimately the industry. So basically this was the main impact. Then there was a positive side as well. Like PFC we were under service tax. We were purchasing several capital goods, computers, etc. A lot of things we were purchasing. So we were not able to avail the credit, because we were not into the supply of goods and all. So due to the GST, we were able to avail the input tax credit in respect of goods also, which was not the case earlier. Although the earlier rule under the service tax law that 50% only ITC we can avail for banking financial sector, that was continued under the GST regime also. Because so that is a sort of benefit also, because if we see, we are into taxable as well as exempt supplies, and in our case around 98% of our supplies constitute exempt supply, basically interest on loan. That is the major loan. Hardly 2%, 3% is the. So if we apply the normal rule, then we will be able to avail only 2 or 3% of the credit. But as a special dispensation, we are having the option under the service tax regime also, it was there, and under this GST regime also we are having the option कि instead of opting for the pro rata and all, we can directly opt for the 50% ITC, 50% ITC we can reverse and 50% we can take. So in my view, for banking financial sector, there is a negative with regard to the increase in rate of GST, but there is a positive with regard to the availment of the input tax credit in respect of goods, which was not permissible earlier.
Thank you, Salim. So I will just definitely ask this question to Sudipta and Sanjay ji. So just share your views on this particular.
Hare Krishna to all my panelists and to all the illustrious gathering here. Friends, after listening to the elocutory speech of Fali S. Nariman, a 94-year-old legal stalwart, we can say that we should be also learning, because since at an age, there is no age for learning. When a 94-year-old person can understand GST, we should also try to do that. And I think after 5 years of GST coming into picture, the biggest tax reform in the country, we are still, all of us are students of GST law. It's very difficult to open the innings once you have Atul Gupta ji besides you, and the gathering we have to have Lakshmi Kumaran ji and others to come, the legal stalwarts. But still, I would say when GST came in 2017, we all had apprehensions that it would be a good and simple tax. It was supposed to bring ease in understanding of the law as well as in compliances. Friends, I must candidly admit, I am not an author or a speaker on GST, but I can say I can contribute a bit in the execution as well as the practical part of it. Being the president of the Bar Association here, the Sales Tax Bar Association. And this, speaking on the subject, the sectoral part, I would say that the sectors which had low value addition have been really benefited by the coming of the GST. You can say, one example I can say for textile industry, it has really gained. Now, earlier they used to have huge manufacturing costs and taxes were there, excise and all, but after coming of GST, now they are getting the benefits also, and it's a better smooth line and it's a smooth way for them, transition after this. Then the other sectors I would say are, which have gained are manufacturing. Manufacturing industry has gained. But side by side, contrary to these, the sectors which were exempt earlier have been really put into task. Like the health sector, especially the hospitals, I can say, because they don't have the facility to take the input tax credit, they have been put to a difficult task. So, and one sector, I would say, telecommunication sector has also been unbenefited because of this. Earlier, the tax rate used to be 14 to 15% tax rate used to be for telecommunication sector. But after coming of GST, it's a flat rate of 18% services tax on telecommunication center, though there's some respite on logistics part, but still that's negligible. So in my view, though GST is a big reform, there are certain, we have a long way to go, we have to improve in it. That's my, thank you.
So I think I'll sort of have a more broad-based answer. At the time of transition, what we saw, and I, being a lawyer, probably is a slightly outsider sort of a perspective. I'm not as hands-on as most of you. The sense I got at the time of transition was, especially for the service sector at large, the transition was a lot more painful, especially for those who had the benefit of a centralized registration. For them to get used to the whole concept of 28 jurisdictions suddenly and being called up and being subject to the whole series of enforcement and audit and all of that. So that I think is something that was, I wish different policy measures, and we'll talk about it as we go along. Some of those were thought about to mitigate that pain. Of course, now that 5 years have passed, I think more or less people have settled down with that. Atulji touched upon the infra and construction, the credit restriction part of it. I will focus on the infra portion or infra sector a little more. I have had the chance to work on that sector. When we're talking about assets like say a port or an airport or anything of that sort, which is very capital intensive, and then you deny credit on that, I don't know what benefit it serves. You are collecting tax, but you're making the usage of those assets, you're making the cost of those assets to the economy much higher. So to that, and this is something I remember in the run-up to GST in 2017, there were some specific subcommittees for infrastructure, etc. And these issues we represented. I specifically remember there's a port project I sort of represented for. Just in terms of credit, there was a loss of some 500 crores. Just credit. So imagine the amount of, the investment that is going in. And of course, no one was going to take a call on 500 crores credit, and the provision remained unchanged, and we all see the provision today. The point is, isn't it a short-term sort of approach? We are maximizing revenue, but we are pushing up the cost of those assets. So I think infra sector definitely needs a little more specific, and now that there is so much policy emphasis on infrastructure, needs a more specific care. Another, petroleum was also touched upon, but I'll mention a very specific aspect. Of course, there is no output GST, and whether or not it can come in GST is a much larger debate. But can't we mitigate some of the pain points? Let's take the example of royalty. The issue is pending before various courts, etc. But the point is, at a policy level, why do we say that a sovereign function should also be liable to tax in the hands of that user? It is not only restricted to oil and gas, it is also telecom. I mean, look at the spectrum. Of course, for telecom, there is output GST, and but the cash flow impact, the time it takes to liquidate that massive amount of credit, I think some of those aspects need to be looked into. So I think, yes, probably for a manufacturing or goods part of the economy, the transition was probably more seamless, probably less painful. I'm leaving aside the inverted duty sort of scenarios that were there in some pockets. But in general, I think they had it slightly better than the services sector. I think one sector that I must mention really benefited is online gaming, which of course is in the radar now. But if you look at it, I don't think there was any policy backing behind it. It just happened. They were in the right place at the right time. COVID helped them. But if you see the growth numbers from 2017 to 2020-21, I mean, I represent a few of them. The numbers are astonishing. Like exactly. I do a double check at times when I see 1200% growth, or that's that sort of numbers, and they have really benefited from the regime of paying GST at 18% only on the platform fee, and which is where obviously the government is now trying to get a bigger slice of the pie. Yeah.
Thank you. So I feel it's a mixed view, like some sectors are partially benefited and some haven't got the benefit yet. But like Sanjay ji touched the sector of telecommunication, touched the sector of this telecommunication, like royalty aspects. So now my question to the panelists, like which sector do you think requires immediate attention? Like it's remedial actions that can be taken just to smoothen the seamless flow of like credit, like paying tax, like doing all the compliances. So what is your view on that? Like which sector you feel like not yet got the right benefit?
No, I mean, I touched upon infrastructure, and I think that is where the majority of the policy thrust has to be, because that's where the cost, because of section 17(5), I think the impact of that is most felt there. See, I think at a policy level, we need to distinguish between, and I say this very often, means versus setting. What do I mean by means versus setting? If you are using an asset to provide your output service, that's a means of providing your output supply, output taxable supply. That has to have a different policy treatment or tax policy treatment from something which is merely a setting, say like an office space for me as a lawyer, as opposed to something that I'm really using, like a mall in the case of a, for a commercial developer, or a port for a port operator, airport for an airport operator. I think there has to be, we can't say paint everything with the same brush and say, I'll deny credit everywhere. The moment there is cement and steel, I will not give credit. You bring in, checks and balances to ensure there is no sort of money laundering happening, or, in the real estate, we already have a provision where they, for residential real estate, where they say that you have to buy from a registered dealer. If you don't, then these are the consequences. Bring those in by all means, but let there be a flow of credit. So I think that, that would be my immediate thing that I can point out.
Anyone want to say on this particular?
I would say health, education, and housing has to be taken care of by the government, and some good policy decisions should come on it. And as far as I would say the sector of, I can say, like recently they taxed hospital rooms for 5,000 rupees more in this 47th GST meeting. Rather, it has been effective, come into force now. So that could have been just a pinch, though people say that it is not going to pinch much, but it is going to pinch a lot up to some extent. That is the
Salim ji.
As far as in regard to the banking sector, one issue that I would like to highlight here is regarding the finance leases basically. Finance leases, if you see, it is a mode of financing, alternate mode of financing. Instead of giving loan, you purchase the asset in your name and give it on finance lease to the other party. So, in case of loan, if we see the principal repayment, that is a transaction in money, no GST is there, and the interest on loan, no, it is again an exempt supply, no GST. But in regard to the finance lease, although it is akin to the loan transaction only, the entire lease rental, the principal amount, if we see the finance lease rental, it comprises of the principal and the finance income. The entire amount suffers the GST debt to at 18% or at the rate applicable to the supply of those goods. So this is basically, it washes out the entire concept of the finance leasing and all. And rather in power sector, where the power utility, which is the lessee in this case, it is not registered under GST. It cannot avail the ITC. So it has completely eroded this finance lease business. So in one of the suggestion, and in regard to the construction business, just the existing rate structure of 5 and 1% without ITC, in my view, the earlier option that was there regarding this 5 and 12% with ITC, it should be given to the developers, and further the government may review this deemed land valuation of 1/3 instead of the actual valuation of land could be given an option of the developer where the land is costing less or higher. The option must be there. So in order to reduce the housing cost, they are my takes.
I think in the latest GST Council meeting, they have increased the prices on job work also. I think in India, creation of employment is a big challenge for everyone. And the industry, those who are really promoting employment, either it's a skill or unskill, so they have increased the rate from 5 to 12 from, I think, 18th July. So definitely it's going to put the pressure upon the employment generation and all this one. So government, I don't know, definitely they must be thinking in a broader term, but overall there are challenges. So job work means just, we are a just 2,500 crore company and we employ more than 20,000 people. So you see the number of employment and the turnover. So these type of industries should be treated differently. It's a labor intensive industry, so any pressure upon the system definitely will disturb the overall ecosystem. We know employment situations and so many things are happening. So these type of things government must be thinking about what they think
I have
of
some
it.
data like footwear sector itself contributing 2% of the GDP and just providing more and more employment to the semi-skilled unskilled labor force. So now I think it's time moving to the next question, coming to the export sector. So like before the implementation of GST, we have the glimpse like it is just going to boost up the export sector. But do you really think that it has given some boost by whatever the policies they have brought, like advance authorization and EPCG schemes? So do you really think that it has boosted up the export sector?
Export, so I can just share interesting number. We are number one non-leather exporter in India last 5 years. And if you see, I'm just completing the question, and with only 100 crore turnover. So this is the position of India. Number one exporter in India, non-leather, especially non-leather, I'm using the word, not leather. So you see where we are. With 100 crore, we are number one last 5 years. So I think lot of things to do to promote the export. Wherever you go globally, China and so many other small countries are there, and we are not able to beat them. The government is promoting EPCs is there, so much incentive now with GST. It's an auto system. You go and get the GST refund. It's not an auto. Just they say you file the document and you get, but you have to go there. So all these things, I think, for few government systems, I think it's a bonanza for few departments. And so I think they never thought, if you talk about the VAT people, who was bothering them? And now they are the real kings of today's world. There is I think, a practical experience which we are facing. The GST, it has been divided among state VAT department and central department. Central people are more mature and they are not crazy when they see the number. 2 crore, 10 crore, 20 crore, they are not crazy. And when they see the number, they think, oh, huge money they are earning like anything, and why we should not get the benefit. So this type of mindset is there. So I think when it will change, coming back to export, I think lot of potential is there. India being that advantage we had because we have so much manpower in the system, but we are not that productive and competitive in the international market. These challenges are there, and definitely with GST things are better, definitely better, but lot of things to do for export. And without export, we can see the situation of Sri Lanka not comparable with India, but still foreign exchange is the most important for any country, and we are also generating, but it's very, very minimal amount we are contributing. So lot of things to do.
Thank you, Batra sir. As far as the export is concerned, Sumit, we have to see the larger picture. Now, certainly because of the advent of GST, what happened that we removed the cascading effect. So our products which were less competitive earlier, as rightly mentioned by Batra sir, that with a 100 crore turnover, one company is getting this kind of a prestigious recognition of being the number one. But because of the lot of other factors were there, including the cascading effect, that our products were not so much competitive in the global trade. But yes, with the GST is now there, and we have removed the cascading effect, that there is no tax on tax. So practically the aim was, as being discussed, that there will be the 100% credit available in the entire chain. So what will happen, that your price will go down for the international market, and you will be able to compete better, so that the product, the exports growth will be there. The other 2-3 aspect which also give the boost to the export, number one is about the refund, which again Bhattacharjee touched upon. That number one, the procedural aspect, that okay, you have to visit the department, there is a human intervention involved, the process is not smooth. Even I can tell you that 2 very, very important aspects related to the refund as well, apart from the bottlenecks related to the human intervention. Number one is, I was discussing the Vishal yesterday, that the FOB value versus the invoice value. So you are getting the refund only on the lower of the following. So practically the CIF, rather than adopting the CIF, you are adopting the FOB. So that actually reduce the value of your refund. So again, that is kind of a things which should not be there. The another very, very important aspect, that we have a system called DGARM, which is I will say the fantastic system that capture the each and every transaction and do the due diligence risk analysis. But what is happening, say for example, Sanjay ji is an exporter and he is buying the goods from Mr. X. Now the X is buying the goods from Y. So Sanjay ji will be maximum aware about the compliance of Mr. X. That is called L1, not about the L2. Now in the entire ecosystem, if the L2 will do some default, the refund of Sanjay ji will be stopped by the system, and then it will take years to get that flag removed, and by that time his entire refund claims will be held up. So they will hold the entire refund of all the refunds. So practically, if the exports, so how sir mentioned about another country. So what they are doing, they are giving a lot of thrust, because that increase the employment opportunity, that increase the revenue of foreign exchange, and the n number of other benefits are there. So every country is giving a lot of boost and thrust that I will give you this incentive or I will give you that incentive. Whereas because of small things, so ultimate aim, GST, removing of cascading effect, giving the best of the credit, fine, everything should have been okay. But still our exporters at times are facing problem because of these small bottlenecks, or some kind of a formula, some kind of a L1, L2 red flag created or something like that, which actually are the pain points of the exporters. I will say the pain points. I am not saying that if there are some kind of wrong practices are there, certainly that should be catch-hold, because ultimately no wrong practice should be allowed to prevail. But in the pretext of this, that okay, we have to check everything, what is happening that you are actually curbing the smooth and the fast flow of the things which should be there. Apart from the other things, when you mentioned about the specific sector, even in the earlier question also, similarly as sir mentioned about the employment generation, likewise exports, likewise infra, there are the sectors which give a lot of importance to the employment opportunities. So I believe that whether it is a medical sector, education sector, so we should have the special wings available, that okay, because these are giving the more the employability in the country. So there should be the efforts on the skill development, there should be the efforts on the tax ecosystem should be so smooth for them that there should not be any kind of a cascading impact. As he rightly mentioned that okay, you are, there is a mean or there is a setting. So setting up like a chartered accountant, I am setting up my office. So certainly I will be running my office. So okay, you don't want to give me the credit, no problem. But where it is a mean that you are earning the lease income from that only. So one side you are saying the construction of a immovable property is taxable. Okay. Another side you are saying since it is a immovable property, I will not allow you the credit of the same. So the same things are having the different color at the different occasion. So that should be seen with the same eye, rather than that the different occasion you are looking the same thing with a different eye. I can say, but I have the other colleagues also, so I will be speaking on some other.
I fully agree with the view of Mr. Atul Gupta ji. See, at Bar Association, we get the most complaints we get are that we are not able to get the procurement of the refunds. So getting a refund is really a Herculean task, though on papers the government say they have eased it out by making it a single window, like from the one officer, same officer can issue the refund for CGST, SGST and other like paperless they say, but it's nowhere paperless. Practically it's not paperless, I tell you. So, and you all are tax professionals and we all know what difficult time we have to going to officer and trying to convince him about the refund, like FOB value, CAF value, as he said. And furthermore, what we find is at the state level, the understanding of the law is much less than the officers who are at the CGST level, central level. So that understanding has to be there. That creates a difficulty in issuance of the refunds. That's the practical approach, I would say. Thank you.
So one small anecdote to support everything that you said. I recently in a family gathering, I met a very distant elderly relative of my wife, and he got to know I work or have some connection with GST, and he started scolding me literally that I am not getting refunds, etc. I had to clarify I am not part of the government.
That's the actual pain.
I am not holding up your refund, etc. I have nothing to do with this. So I think that pain clearly is very, very evident in terms of the refund. I think just one point I'll touch upon in terms of the export. I think we have all spoken about the goods part of it. One typical thing that we are seeing is in the context of services export, but because of that, how the department is interpreting intermediary. I think as per them, every service exporter is an intermediary, unless proved otherwise. So that is how they start So whether you are doing, business development, market research, anything which has a touch point in India, somehow they don't seem to be able to get over the fact that they lost all the litigations with Microsoft and that whole line of cases. The ghost of Microsoft, the ghost of Paul Merchant continues to live on by way of intermediary. It is under challenge in various high courts. I am involved, but it just doesn't make sense. One of the, if you look at it, service exports is a very crucial area for our GDP in terms of the forex that we earn. And the moment you are talking about a 18% levy thereon, it's not going to be recoverable from that's not the kind of margin we have in today's world. So you will kill the industry. When it fell on the BPO sector, thankfully there was enough brouhaha, so the government backtracked on that. But I think the larger point or the larger concern vis-a-vis intermediaries still remains, and I don't know why, as a policy decision, the government has dug its heels on that particular point. So I think that's one aspect that I wanted to emphasize.
Even just to add into the problem of the service sector, the scripts and all. So one side you are giving the scripts to boost the export, other side you are saying that they will be treated as exempted sale and you have to reverse the credit. So now thankfully they have made that retrospectively amended that okay, they will not be treated as, but how many refunds, how many calculations, how many credit gone. So that shows that okay, you are looking more the more the collections as compared to that okay, let us give the boost to the ecosystem.
So just moving ahead, as a professional, what do you think the steps should be taken by the government just to just to ensure the equitable benefits that is being transferred to different sectors, like be it power sector, be it construction sectors? What are the steps that government can be taken?
Sumit, I believe that this panel or even everybody will have the suggestion, one or the other suggestion. So total we may have the 100 suggestions for that. So very difficult to summarize in the next 5-7 minutes available with us because of the time paucity. But I will say, so maybe one we can give, all of us can give one.
Yes.
So interestingly, Salim Saab was mentioning about that out of his entire turnover, only 2% turnover is taxable. And he also very happily mentioned that they are buying the computers, laptops and everything. And earlier in the service tax regime, the credit of the excise duty was not available. Now thankfully is available. But it's a vice versa. So I will say the 2% credit means under the rule 43, what he will do, that he will claim the entire credit first and then he will pay the 18% interest for the 98%. So practically, if the total credit you will take 1 crore of rupees for the capital goods and only the 2% GST tax activity is taxable, on the 98 lakhs you will be paying practically the 18% interest to claim the credit of rupees 2 lakhs finally in the 60 months. So now I can claim 2 lakhs only. You allow me, but the rule 43 doesn't allow you to claim the 2 lakhs rupees credit. The rule says that you have to claim first the 100 lakhs and then reverse at the rate with the interest at the rate of 18%. Okay, so you can understand that, and this is for every sector. Wherever there is a taxable vis-a-vis the exempted, the hospital sector, if they by mistake they decided to claim the credit, because now their activities, certain activities are taxable. These known healthcare service like cosmetic and plastic surgery, the room more than 5,000 rupees, and they decide that okay, I will take the credit. So finally they will end paying more the interest than the credit claimed finally on the capital goods. So this kind of, I will say, the policy interventions are much required for across the sector.
I think one slightly, different kind of a policy intervention, and this is something I have been thinking about. Both in European Union as well as the Gulf countries, when VAT was introduced, you have this concept of VAT grouping. And this sort of goes back to the point that I was highlighting vis-a-vis, services sector and multiple jurisdictions, being subject to multiple jurisdictions. And that's a real pain point that we are facing as audits, start in a full flow. You are getting pulled in multiple directions on the same issue. The multiple state authorities are raising that point. I think somewhere we need to start seriously thinking about VAT grouping as an option. And if mature VAT jurisdictions like EU has done it for several years, I don't see a reason why it can't be implemented in India. Because if you look at it, India in a way is comparable to EU, where there are multiple, EU has multiple nations, we have multiple states. But the question of multi-jurisdictional presence is comparable. So I think there is a lot to learn from VAT grouping as a concept. While we rejected it at the time when GST came in, because as probably a federal compromise, now that 5 years has been spent, there is some level of stability. That's something that one can probably look at, apart from, of course, everything else that...
It was there in the service tax in the shape of a LTU.
Correct.
So at least you will go for a single assessment for all your units. Now what will happen, that the same operations of yours in 22 states, same activity, somebody will say, no, it will classify under this particular category, or the other state will say, no. So what you are going to do, when you will go to the tribunal or the court.
And tribunal is still not there. So I think we are running short of time. I wish I could continue this discussion for some more time.
Question you may ask.
I think the intent of GST when they started, now we have 4 rates, no?
Yes, sir.
No? So we have, I think, because we have visited so many times to the North Block, we have met everyone knows us. So, but I think rate slabs should be minimal. That is the need of the hour. Otherwise, things are not taking the, I think, original purpose was this kit should be simple. One nation, one tax, that is a good part. But at least in India, we should have 2 rates to move forward. Otherwise, things are there. In our case, it's really the tough situation. There are 2 rates, 5%, 18%. It's a now transaction value, not MRP. Earlier it was MRP. So if I sell any product at 900 rupees, I am charging 5%. And it will go to the wholesaler or distributor, then it will go to the consumer. Once it reaches, it will be 18% because it's a transaction value. So how to address that? So definitely they need margins also. So these challenges are there. So one nation, one rate, and I think if they can segregate one item, one rate also, if it is workable. So all these challenges are there. Hope so they will understand and they will change. Even in hospital, they are bringing 2 rates, no? More than 5,000. It will be taxed and less than 5,000, no tax like that.
And what will happen with the when you are getting for the medical, a composite rate of say 50,000 rupees for the stone removal. Room is inclusive.
So things are settling, but yes, new challenges are also coming up. Hope so it will settle in coming time.
More than 5,000 or less than 5,000?
Friends, like
Thank you,
Atul
thank
ji
you.
said, even after 5 years, we have 100 recommendations we can make to the government. Setting up of tribunal is one of them. After 5 years, you don't have a tribunal. Then, even after the 5 years, we still have problems with GST and network. Our professionals doing practical work, sitting in their offices, still have to struggle to some extent. And the reason is, GSTN, I think, has taken an approach far beyond the law they have reached. They have rather outreached the law, I would say, and where they have put certain checks and balances of their own, which is not even mentioned in the law, which we find. We at Sales Tax Bar Association had filed 2 writ petitions in the Delhi High Court, and I think that got most of the relief to the nationwide taxpayers, because after that, there were many, after that, those orders, GSTN improved and many things came to the facility of the dealer. But still a lot has to be done. Then friends, I would say this, this should not be a notification, a circular based law. The government should definitely think on it. It's been 5 years, we have got more than 1,000 of circular notifications and many guidance notes, etc. So a law should be substantial loss should not be touched upon that much upon. It should be static. And see, Atul Gupta being an author, he keeps on writing the book. He has to amend it. After 2 months, the new notification comes. He has to update it. So that picks up. Yes. See, look at him. Mangani padti hai. So I leave it to the house that after 5 years, is GST a real, good and simple tax, or is it a true statement or a farce? Thank you very much.
इसलिए हम लोगों ने ऑनलाइन बुक कर दिया वो हर वक्त अपडेट होती रहती है.
Thank you. And sir, I think we are running short of time. I wish I could have continued this discussion for some more time, but yes, by the limitation of time, I would request now Kritika just to take over the dais.
Thank you, sir, for such an enlightening discussion. I would now request Mr. Sanjeev ji to present a memento to CA Atul Kumar Gupta, please. I would request CA Vishal Gill to present a memento to Mr. Sudipta. I would request Mr. Manoj Kapoor to please present a memento to CA Sushil Batra, please. I would now request CA Smiley to please present a memento to CA Mohammed Salim. I would now request CA Anu to present a memento to Sanjay Sharma. I would request Mr. Manoj Kapoor to please present a memento to CA Sumit Mishra. So can we have a quick group photograph, please?